Hi folks, myself Raj. Welcome to our channel Code Shack. Thanks to everyone for watching our podcast show. And today is episode number 60. Our discussion topic is inflation, red cut, stock market and bonds. So let's start our discussion. Last week's inflation report came hot again, pushing the red cut further to September, increasing a short-term nervousness in the stock market. And we saw stocks sold off. The Dow Jones Industrial Average led the way, closing down 2.37% on the week. The S&P 500 fell 1.56%, while Nasdaq held up the best, finishing around 0.45% lower. Precious metals are in their new highs, but I still think there's more room to run. But stay alert, there can be a short term pullback as the rally looks tired. Also, thing to note is yield curve spiking and gold continued to surge. This means there are some problem at macro level. So people are buying gold as their safety protection. Also, it seems the Fed may come under a political influence, and there can be a rate cut of 25 bps probably at the end of the year. But technically speaking, as unemployment is low and inflation is stubborn, it is not the environment for a rate cut. Any rate cut now can bring big consequences. Every time the interest rate in the bond market rise, we see the long-term bonds leading the sell-off. Important thing to recognize here is that the long-term rates rise, the less the Fed will have to cut rate to effectively re-steepen the yield curve. So the rise in the long-term bonds, it's good for the Fed. Also, the Middle East crisis, if continues, we probably will see more spike in the crude oil, keeping the inflation stubbornly high and probably fading our red cut. So that's everything for today. Hopefully you guys like today's podcast. Again, see you in the next week. Have a wonderful rest of your week. Thank you.